Good evening, everyone, and thank you all for joining in. On behalf of HDFC Securities, I welcome you all for this session on weekly FNO Outlook. Firstly, let me introduce myself. My name is Tarang Solani. I am the product manager, and along with me, we have Mr. Devarsh Vakil, who is our deputy research head and who will provide us with the outlook on the market. So before starting it, as usual, we'll provide you some of the important, we'll provide you a small demo on some of the important features of our Pro Terminal, which is our advanced trading portal. And post that, Mr. Devash will provide us with the outlook on the market since tomorrow being the weekly expiry. So let us see what we have on the outlook. And before that, we'll just give you a small demo about our important features which we have in our Pro Terminal, which is useful for our futures and options traders. So I'll just share my screen to you all. I hope my screen is visible and and my voice is also audible to you all. So I'll be briefing about an important features of order slicing. So order slicing is an important tool which is helpful for the FNO traders to place the big quantity in a one single order window. So we have an order slicing. You must be aware that in Nifty there is a cap wherein you won't be able to place more than 1800 shares quantity for Nifty, and for Bank Nifty more than 900 shares in a one single order window. But through our order slicing, if you go to our order slicing functionality, you can place big order in a one single order window. What will it do is basically it will slice the order into a baby order. If you want to place more than 1800 shares, it will slice the order in a baby order, and then you can place it into the exchanges. And if your desired price matches, your order will automatically get executed. So let us understand. I will just go to my watch list and I'll give you one simple example how to use this feature. Now, suppose I'll take an example for 17900 put option, which is quoting at 24 rupees 10 paisa of 25th May expiry. Now, suppose if anyone wants to buy or sell, I'll take an example for buy. So if anyone wants to buy 2000 shares of 17,900 put options for suppose for an example, and since it's 2000 shares, you won't be able to execute in the normal order tab which is there in the Pro Terminal. Now this is my Pro Terminal. So if you won't be able to execute in a normal tab, so what you have to do is you need to place this order through our order slicing features. So here you need to basically insert 2000 rupee 2000 quantity, and in that you need to click on order slicing. So once you click on order slicing, there will be two tabs which will get be functional, that is in the terms of quantity and terms of price. So now in terms of quantity, there will be a two option which will be populated to you, that you want to slice this order based upon number of orders, how many orders you want to break this 2000 quantity, or based upon how many quantity you want to break this 2000 quantity, that is how many per quantity per order it should be to break this 2000 quantity. So if you select quantity per slice and if you insert 500, so what will it do is basically it will break this 2000 quantity into 500 shares, and based upon that, four orders will go of 500 shares, which will sum up to 2000 shares total, and based upon that it will execute in the exchanges. And there is an also functionality of the price. So here suppose you don't want to buy it 24 rupees 10 paisa, which is the last traded price, and but you want to buy it at lower, at suppose at 20 rupees. So that also you can do it, that at 20 rupees, but make sure once you select 20 rupees, here you need to select limit, because this is the limit price you want to place. And then if you click on slice, you will be able to see that it is that 500 shares of four orders have been made at 20 rupees each. Now, again, there is a functionality that if you want to place this order at a different price, you want to place the 500 shares at 20 rupees and the subsequent orders at a lower price, and how you can do it, then you can reset this. Again, you can feed in 500 shares. You need to click on limit, select limit from the drop down menu, and in place of 20 rupees, if you want that my first order should go at 20 rupees, and post that all the multiple orders should go 1 rupee lower. So if you want to accumulate this option at a different price, that also you can do it. There is a plus or minus icon over here. Plus means if you want to place the order higher than the limit price which you have set, and minus means if you want to place this order lower than the limit price which you have set. So if you select the minus icon and then you have to fit in the tick size. So 1 rupees 20 ticks. So this is parameter where you will be able to fit in based upon the tick size. If you do one tick, that means it will place 5 paise lower. But if you want to place 1 rupee lower, that means that comes to 20 ticks. And if you click on slice, you'll be able to see that 500 shares first will go at 20 rupees, second 500 shares will go at 19, third 500 shares at 18, and so on. So this is a very good tool, basically an order slicing where you can break your big order quantity into a smaller one, and also you can place it at a multiple price range. That will be an easier task for you rather than going and placing this order in a multiple times. You can place this order in a one single order window. But here you need to make sure once you are placing the order slicing, first you need to transfer your fund from your bank account to your trading limit. So in this case, if I wanted to buy this 2000 shares of 17,900 put option at 20 rupees, then I need to basically transfer 40,000 rupees first in at least 40,000 from my trading limit to my sorry, from my bank account to my trading limit, and then only I could be placing this order. If you don't have your funds in your trading limit, your order will get rejected. So it won't ask you to hold your amount from your bank account. You need to first transfer the fund from bank account to your trading limit. So that's it from my end. Now I will invite Mr. Devarsh Vakil to provide us in the view on the market, since tomorrow being the expiry and market has been showing some kind of a negative momentum. So let us see what we have for tomorrow's and for the next week also. Over to you, sir.
Okay, thank you, Tarang. Is my screen visible?
Yeah, it is visible and you are audible, sir.
Okay, thank you. So let's start. Sorry, I'm facing some technical problem. 1 second. Okay, now it's working, right? Is my screen visible?
Yeah, it is visible. Yeah.
Okay, great. So let's start. What we have seen in this expiry till now, that hardly any buildup is seen in the Nifty and Bank Nifty, and we have seen that the overall they are stuck in a small range. While put writing is seen around 18,000 to 18,100 levels, calls have been written around 18,300 to 18,400 levels. So here we can see that the 18,000 and 18,100 are the put options, while 300 and 400 are the call option. Now for tomorrow, we feel that this 200 and 300 is going to be a big resistance. So for tomorrow, the range for the market should be between 18,300 to this 18,100 kind of a level, and maximum pain being the 18,200 level. We expect market to expire around this level, 18,200 level. Expiry should happen. So if on back of international cues, if Nifty were to open little lower, you can create long position with a target of 18,200. If it opens very high, 18,200 should be the target. What are FIs up to? So FIs have turned quite aggressive buyers. We have seen that they have gradually started accumulating stocks in the cash market. In derivatives also, they have bought about index futures worth 1,466 crore, and their open interest has gone up from 89,000 contracts. So now the net short positions are over. If you remember at the beginning of the April, they were heavily short, 90% short, and only 10% of the FIs were long. Gradually, they covered their short position till May 2nd. They have become net long, and now gradually they are reducing their long, which was from 1.05 to now 0.96. So still uh, they are not aggressively long. We have seen historically that this number is, when they are extremely bullish, this number has gone to even as high as 1.5 also. So right now they are cautious, and the short positions are more or less covered, but still they are not aggressively creating longs. Overall, our overall market outlook, we have been bullish from the March series. We are now raising the stop loss from 17,800 to 18,000 levels, and that stop loss we are continuing. So whatever long positions you have in the market, you can continue it with the stop loss of 18,000 as of now. 18,100 it could be a level where there is a lot of open interest. So once it is broken, then only we will see higher levels like 18,400 and even 600 also. So right now, continue the long bull position as we've seen the put writing around those levels. No fresh build up in the short side. FI is continuously covering the shorts and going long, and also there is a possibility that the at higher level there could be short covering. So we continue to remain bullish. Last couple of days market have seen some volatility, but we will take that volatility in stride. We will not be overly worried about the short-term gyrations. Similarly, for Bank Nifty, from 42,500, stop loss is now raised to 43,000 level. So there also we have seen long build up in Bank Nifty futures, and put writing has happened around 43,000 to 43,500 levels. Maximum pain is at 43,600, so that is where you can expect the Bank Nifty to expire around those levels tomorrow. 44,000 is the immediate resistance, and beyond that we can expect a sharp rally towards 44,500 to 45,000 levels. So overall we remain bullish on Nifty and Bank Nifty, and we continue the trail stop loss 18,000 for Nifty and 43,000 is the stop loss for Bank Nifty. Now for the sectors, capital goods, automobile, and real estate. These are the sectors where we are seeing a lot of build up on the open interest side, a lot of activity. And pharma has corrected. So pharma, we had seen some short positions, but now I think those index has already corrected, so we can neutralize those short positions. Metal is the still weakling, and metals are the stocks where we have seen some kind of short position. So if international metals move up, then there is a scope of short covering in metals as well. But otherwise, capital goods and reality and automobiles look good from the sectoral perspective. So that's it. I think we'll continue with the bullish recommendations which we are giving. Continue to remain long with 18,000 in Nifty and 43,000 as a Bank Nifty stop loss. That's all for my side. Now we can open the forum for the question and answer. Over to you, Tarang.
Yeah, thank you, sir, for the outlook. So as we mentioned that we'll be opening this forum for question answer section. So if anyone has any kind of in doubt regarding what we have covered so far regarding the outlook on the market and the order slicing features which we showcase, so you can just write it on the question answer panel which is there on the right hand side of your screen, and we'll revert you back. So there is one question sir, is the open interest bar which you showcased is available in HDFC Securities terminal? So I think we can refer to our report of HDFC Securities, correct, sir?
Correct. So these are the charts which we are preparing on our own. We share this as a part of our daily morning commentary, and this presentation which we have shown to you also will be shared to our customers. You can get it from our website in the research section also.
There is
also one more
yeah.
comment that in morning section in Telegram, daily include Bank Nifty support and resistance. So we do cover the support and resistance as a part of our daily morning commentary, the daily. specifically the levels and support and resistance are also shared. Apart from the indices, we also share support and resistance for large our top 200 stocks also. So you can refer to the periodic research section on our website and our daily reports. You will be able to get that. And specifically for Bank Nifty also, we will highlight them. So it is part of the daily report. You can look up the daily report and where you will get it, Mr. Jaykrishnan. One more question is from Deepesh Agar. The RBI has given the banks 30th June 23 a deadline for banking sector good. So there is one expected loss provision, but that is going to be implemented from 24 and beginning of 525. So that may have an impact on some stocks, but right now it is into general discussion mode. Once comments from the public is available, then there could be some guidelines. So it is some time away and it is not a concern on the markets right now, Mr. Deepesh.
There is one question by Ms. Priyanka More stating that you have a webinar on option trading beginners and how to do the trading. So, ma'am, we do conduct a webinar on weekly, one webinar on how to trade options and basics on futures and options and how to trade futures and options with HDFC securities. So, I think if you have an RM, you can tell your RM if there is any webinar scheduled. You can intimate them, or else you can refer. You can visit our website. So on the daily basis, there are various webinars which happens. So if any webinar which will come on the option trading, you can register for it and you can enroll for it and you can attend it. And also it will be intimated through the email. So make sure you check your mail for that. So there is one more question: outlook on pharma sector by Mr. Tanmay Patel.
Yeah, so outlook for pharmaceuticals, actually, they have gone through a very long consolidation. The numbers from many companies were not as per the market expectation. But overall, the Nifty Pharma Index and the many stocks have come down to very strong long-term support. And from here, the pharmaceutical sectors looks like there could be a turnaround. There is a recovery chance. So I would pharmaceuticals and specialty chemicals in the API segment or the pharma segment, there we think there is an opportunity for long-term investors to create position. And if you are looking for a longer-term derivative trade, look at the pharma large cap stocks. There is an opportunity to accumulate them now.
Okay, there is one more question by Mr. Sankar Jha. In order slicing, brokerage will be one order or multiple orders? So it will be on all the BB orders which has been made. So it will be on all the orders after slicing. How many orders you basically break this order? So it will be on that basis.
So healthcare sector, the healthcare, pharma, hospitals, and others are looking good, but not for specifically for next 2 months. They have gone through a very long, drawn gestation or a consolidation. Now, I think over the next 3 months, they will try to bottom out. So do not keep a very short horizon for them, but overall, the sector seems to be bottoming out. Mr. Krishnamurthy is asking about the Fin Nifty. So what I'll do, I will cover the Nifty and Bank Nifty like Nifty and Bank Nifty. I will start covering from Fin Nifty also from the next webinar. The only problem is that it is not very liquid and hardly any interest is there. But since it is gradually picking up, we will cover Fin Nifty also as a part of this webinar from next week. Mr. Krishnamurthy, we will take your suggestion and we will implement it. So Jay is asking about our Telegram channel. Tarang, can you highlight the name and how to get it?
Yeah, sure, sir. So we have a Telegram channel. You can just type HDFC Securities over there, and once you get it, you will be able to see. And there is only one Telegram channel name is HDFC Securities, so you can subscribe to it. So there is one question by Mr. Pashupati Mathur. How can we judge bullish trend of share through OI? Can you explain, sir?
So it is a little tricky, but the way simply if you want to understand, whenever you see open interest going up along with the price moving higher, you can consider that the strong hands are moving into the counter or moving into the stock, and that means that the trend is likely to continue further, and you can create a long position with a appropriate stop loss. So if it happens during the after the correction, and it happens after stock has come down. That gives you an added advantage where the stop loss is relatively low. So the simplest way to find out whether stock is in going to go higher or lower, you just look at the price and the open interest. If it is price is rising and the open interest is building up, that you can assume that the strong hands are getting into the counter. Okay. Priyanka is asking about auto ancillary sector. So auto ancillary view is bullish. Automobiles as such are doing well, and they had chip issues and COVID related issues for last couple of quarters, last couple of years. Now it seems that the those most of these supply related problems are over. Demand is picking up, and that means automobiles are doing well, and the suppliers to those automobile companies are also likely to do well. So overall view is bullish.
So there is one question by Mr. RM. How do I access the old session which I have missed? So if you have missed, there's a YouTube live session. So you can go to YouTube under that HDFC Securities channel, and you can revisit this session about the outlook on the market, and also the order slicing feature which we had covered in the first part. So you can visit that also. So I think we have covered all the questions, so we can conclude. So shall we conclude?
Yes, we can.
Okay. So thank you all for attending this session. I hope it brings a lot of insights on how the market could pan out in the tomorrow's trading session, also for the next week. And thank you all for attending this, and hope you get fruitful knowledge about it. And have a nice day. Thank you.